Have you ever seen something that looks like a perfect entry on your chart, okay? And then you say to yourself, oh, let me get into this trade. And then you go into a sell position, put in your stop loss, and the next thing, the market reverses and takes you out. And then price reverses again and start going the exact direction you predicted initially. That is a pain point. You are not unlucky, you are just trading where the big players want you to trade. Today, I will show you how liquidity and how the market manipulates beginners like you. Now, let's begin. What is liquidity? Simply put, liquidity means money in the market. Liquidity is where a lot of orders are sitting. Okay, we have your stop losses. We have a lot of people place stop losses. We have a lot of people stack in orders, both buy orders and sell orders at that zone. That very zone is where liquidity happens. Liquidity happens in obvious zones where a lot of people see it that it is a good opportunity for them to get into the market. When you look at this scenario right here, we have an example of liquidity taking place right here. Right here, a lot of people might want to go into a sell trade. The impatient ones jump in once they see the first bearish candle that is going bearish. Okay, they'll say to themselves, oh, it's perfect, let's get in. But then what happens? Price reverses upward, takes you out, and then starts going down the exact direction that you predicted. Liquidity is often available at positions where people see that is a perfect entry. Okay, now think of it like this. The market is a place where the big players like the bank, your institutions, where they need a lot of money to enter trades. Okay, they can't just enter anywhere like beginners. Okay, they need places where many traders have placed their orders. That is the exact place they like going to take their trade. Let me give you an example right here. Now take a look at this. Let's say price is going in the market. Okay, you have your price going in a downward direction. Okay, price going in a downward direction like this. Okay, and then it gets to this point and it forms a double bottom, right? Okay, it's no longer made a lower low, and then you see something like a double bottom right here, and also price comes and even break. There's a break of structure right here. Okay, price breaks the structure. There's a shift in market structure right here. Looking at this as a beginner that is trading chart patterns or probably trading support and resistance, a lot of you might want to say, oh, price has now formed a double bottom right here, and when you look at the zone on your chart, you will probably see reversal candlesticks present. Yes, and you can probably see long wicks of rejection present in that exact zone. According to your analysis, everything looks perfect. There's you have hit the support zone. You have seen reversal candlesticks present here, and price has also broken the structure, the initial structure of a lower high and lower low. Okay, and it has broken the structure and it has shifted the structure, the market. There's been a change in market structure. Okay, and you say, oh, this is perfect for me to get into the trade, and then you hop into the trade right here, and suddenly price retraces right like this. Okay, price reverses and comes take out your what, your stop loss. So you went into the trade at this level, you placed your stop loss right here, hoping to what, to buy. Okay, hoping to become profitable, right? And but now what's happened is that price retraced and it hit your stop loss and you're out of the trade. Okay, so price hit your stop loss right at this level and you are out of the trade. And once price is done doing that, Next thing it does is to retrace, is to reverse. Okay, price then reverses and start heading the exact direction that you predicted. This is what we call liquidity grab right here, and this is the exact position big institutions like to go into the trade. They have to hunt your stop loss, okay? You will hunt your stop loss, take you out of the trade, and then they get into the trade and make massive profit. This is liquidity grab. Now, let's talk about where is liquidity found, okay? Where is liquidity found? Where do we get, where can we find liquidity? You have to know the positions, okay, the locations on your charts where you can find liquidity, so you will not be a victim, so you will not fall into the trap of the big institution. Now, liquidity is usually found in obvious places, okay? It's usually found in obvious places where beginners trade. What do I mean by this? Now, the first place you can find liquidity is your equal highs, okay? Liquidity often occurs where we have equal highs like this, okay? So whenever you see, so let's say this is the price, okay? So let's say this is price movement on your charts, okay? Higher highs and higher lows, okay? And then price forms equal high right here, okay? So price form equal high right there. So at this zone, liquidity often occur, okay? At this zone, this equal high, liquidity is often found at this zone. So on your chart, whenever you see equal highs, do not just conclude that, oh, price has actually reversed. Even if you see all other confirmations like your reversal candlesticks, your break of structure, shift in market structure, do not just conclude that price has actually reversed and is going to go your way if you hop into the trade. You have to wait to see if there is going to be liquidity grab. So liquidity is usually found on equal highs. Okay, so this is an example of equal high. I'm going to show you that right on our live chart. That's liquidity. So this is equal high. When liquidity want to happen, it's going to come here, go take out that high. Okay, once it takes out that high, then it starts coming back down. Can you see that? It starts coming back down. So that is liquidity grab, an example of liquidity in equal high. Now let's look at example of liquidity, another place, another position where you can find liquidity, where liquidity often occur. Okay, so we have the second part where you can get where liquidity often occur is the equal lows, just like the opposite of equal highs. Okay, okay, so we have an illustration like the one we just did. So equal lows, liquidity often occur. That's the one we have here. We have equal lows right here, and then liquidity happen before actually going to the actual direction is going to reverse to. So that is another position where we can find liquidity. Now, another aspect where liquidity often occur is support and resistance zones. Okay, support and resistance zones, these are obvious places. Okay, beginner traders that often trade support and resistance, they conclude that once price hits the support zones or price hits the resistance zone, price is gonna actually reverse. Okay, and the institution, the big players know this. Okay, so they go over there and wait for you to place your trade. Okay, when price hits, let me show you an example on a chart, so I won't be just explaining. Let me show you an example on a chart. Okay, okay, so look at this right here. We have a support zone right here, right? Have a support zone right here. Can you see that? Okay, so the big players, the banks and the institution, they know that beginner traders are waiting for price to hit the support zone, and then they place their buy trade. Okay, they place their buy order. As a beginner, price, you will see price hit this level. Okay, so to you, price hits this level right here, and when you look at it, you can see a bullish candlestick, a big body bullish candlestick, which is kind of a confirmation that price is going to change direction. Okay, and not just that, after that, the price continued to go up right here. And then you can say, oh, let me get into those trade, and you open up a trade. Okay, and then you open up a buy trade, and the next thing you're going to see is that price now reverses, takes you out, because obviously you're going to place your stop loss below this low. So price reverses, takes you out. Okay, it takes, this is your stop loss right here. So price will reverse, take you out. So after hitting your stop loss, then it's now starts going the exact direction that you predicted, and then you're going to be feeling, oh, what happened? I was right, but what happened is because you weren't patient enough to wait for liquidity grab. So this right here that we have is liquidity grab. Okay, so liquidity grab often happen in support and resistance zones, because this is where everyone see as an obvious place for you to place a trade. Now, another place where liquidity can occur is at trend lines. Okay, liquidity happen at trend line breaks. Those trend line traders are usually trapped in this zone. Okay, let me show you an example. Okay, so let's quickly look at this scenario. Let's draw our trend line. Let's get our trend line too. Okay, so let's say we met our chart at this level, and then we pick our trend line too, and we draw our trend line right here like this. Okay, okay, let's say, look at this place now. Price broke the trend line, okay, to the upside, like probably a fake out. Okay, it's like a fake breakout. Okay, then it came back diving inside, and then with a large bullish candlestick, and then you say to yourself, oh, it's going down again, and you hop into a sell position and put a stop loss right there. Okay, now let's see what happened if it if it actually sold downwards. Okay, you can see it right there, that price then retraced. Can you see that? So price went back to the upside, took out a stop loss right here. Okay, and then started going to the exact direction we predicted. So this is liquidity occurring around trend lines. Okay, so let's look at this scenario right here. Okay, looking at this place, you can see that price was initially bearish, right? So we expect that price is gonna hit a support zone and then start trending to the upside, and that's exactly what happened here. You can see that price price hit this support zone right here. This is an obvious support zone because it was tested multiple times. So price hit that support zone right there. Okay, and it also came to form another bottom. This is a double bottom, right? This is a double bottom that we have here. And what happens when you see double bottom is a reversal, right? Okay, now as a beginner with that mindset, you can then look out for what reversal, presence of reversal candlestick at the support zone, of which right there we can see the presence of a doji and long wicks showing rejection to the upside, and then we also see big body candlestick appearing, beginning to appear, and price is trending to the upside. So you can say price has now actually reversed, and then you open up a trade right there in order to buy. Right now, let's see what happened next. Okay, so look at what happened. Can you see that? Can you see what happened? Now, you enter the trade right here, haven't seen that price has reversed. It has even what broken the structure, okay? And you were hoping to buy, and then you open up a trade right there and probably place your stop loss right here, okay? And what did price do? Price retraced, took you out, hit your stop loss, price retrace, hit your stop loss, and then started trending to the exact direction that you predicted. Can you see that? This right here is liquidity grab occurring at what? Support zone. Can you see that? Liquidity grab occurring at support zone. So this is exactly how you get trapped. Okay, this is exactly how you get trapped. Okay, now the same thing happened to the sell side. Okay, the same thing also happened. Let's look at an example for a sell side liquidity. This right here is an example of a sell side liquidity. Now say price was trending upward. Okay, so price was trending upward, and you see that it's made what? An equal high, right? It's made an equal high right there. And even what? There was a shift in market structure. Okay, you can see that this right here, the structure here has been broken. This low has been broken, and you say to yourself, oh, it has actually revised, and you hop into the trade. You hop into the trade right here at this level, place a stop loss here, hoping to what? To sell. And what happened? Price spikes up, grabs liquidity, and starts heading the actual direction that you predicted. This right here is liquidity grab. This is how you get trapped. Okay, so take note of this and try to avoid getting trapped in this liquidity. This is liquidity grab. Let me show you this happening on a live chart. Okay, now look at this. Look at this right here. Just like we illustrated, you see what? A resistance zone right at this level, and it had what? Double top, right? It had equal highs, okay? And then you even see that price has what? Broken the structure, and you decide to go in, open and sell. But what happened? Let's see. Can you see that price spiked up? Price reversed, spiked up. Then it's now reversed and starts what? Actually trending to the same direction that you predicted. Okay, so always what? Wait for liquidity. Always look out for liquidity. Now let's see how to avoid being trapped in this liquidity. How to avoid being trapped. This is the most important part of this lesson. So ensure you pay attention. Let's see how you can avoid being trapped in liquidity. Now you can protect yourself. Okay. Now the first thing to do is to stop trading obvious levels. So stop trading obvious levels. Okay. Everyone sees it. What you are seeing, everyone is seeing it. So try to trade the part that just few persons are seeing. So looking at our illustration here, right here is this right here is an obvious level. Okay, is a level that a lot of persons are waiting to place order. So do not place your order there. Instead, wait for a grab of liquidity. Wait for a grab of liquidity. Then you can now come over here and place your entry. Okay, you cannot come over there and place your entry. Now, you don't just get into the trade after the grab of liquidity. There are things you also have to look out for confirmation, right? Okay, we're going to talk about that. Now, like I said, the first thing is to stop what? Trading obvious level. The second thing is to wait for liquidity grab first. Ensure you wait. Okay, ensure you wait. Don't just enter immediately at a support or at a resistance zone. Okay, as a beginner, you know that the first lesson you got, the basic lesson you got is once price hits support zone, it's going to reverse and start trending up. So what do? You wait for buys. You just get into a trade to buy. And when price hits resistance zone, it's going to retrace, it's going to reverse and start selling. And once you see a resistance zone, you start looking out to sell. Okay, so whenever you see price hits an obvious zone, like your support zone, your resistance zone, you have to wait for what? A fake breakout. Now look at here. You can see that price broke out of this um price broke out of that zone right there, broke out of that resistance zone. Okay, you can see it broke out, but it was a fake breakout. So you have to look out for a fake breakout. So look out for a fake breakout or a sharp spike to the upside. Okay, and then after that you look right here, you are going to see rejection. Okay, you're going to see rejection after the spike. You're going to see rejection. So the first thing is you're going to see what? A fake breakout or a fake breakout or a spike to the upside. Then at this zone right here where we have the circle, you're going to see rejection. Okay, presence of rejection, presence of long wicks, or presence of reversal candlesticks right there. Okay, so after that you are going to look forward confirmation. What are the confirmation you should look out for? That's the same thing I'm saying, like strong rejection, strong weak rejection, and then um you are now going to see shift in market structure. Okay, price is going to start changing the structure. If it was making what higher highs and higher lows before, it's going to now change and start making lower highs and lower low. Then you are now confident to hop into the trade at this very position. Okay, and then you ride massive profit down there. So these are the things you have to do to avoid being trapped. And the next thing you have to look out for is that you should not trade before the manipulation. Trade after the manipulation. This is just the summary of everything I've been saying. Trade after the manipulation, okay? The big players, the banks and institutions pushing price to hit your stop loss, that is price manipulation. Okay, it's not illegal, it's legal. Yeah, it's legal. That is where they want to get into the trade. Okay, so ensure you wait for the manipulation to finish, then you get in just like them, get in the same time with them, and you're going to make massive profit. This is liquidity for you and how to trade it. Now, the simple rule you have to remember is that if price look too perfect, do not trade it. Okay, it is probably what? A trap waiting to trap you. So when price looks too perfect, when I mean price looks too perfect, you have your obvious support and resistance zones, you have obvious break and retest in trend lines. Do not just jump in immediately. Wait to see if it's a fake out, or if if it's a fake out, or if it's a fake breakout, right? If it's a fake breakout, okay, before you hop into the trade. So always wait for what? Liquidity. Okay, so this is our lesson today. Now you understand why the market seems like it's haunting you. It's not personal, it's just liquidity. Start thinking like a smart money trader and stop thinking like the crowd, okay? If you found this video helpful, don't forget to subscribe, because next I'm going to show you how you can use liquidity to enter high probability trades. Thank you for watching. Like this video and subscribe. Bye.